Greetings traders and welcome back. Thank you for joining me again. My name is Chris and I'll be your host today as we slide down the slopes of Survival Guide Street. Today we're going to be discussing soybean futures. Did you know that the US produces more soybeans than any other country in the world? And did you know that out of all of the soybean farms in the country, 98% of them are still family owned and operated? And did you know that it only takes 1 acre of soybeans to produce over 82,000 Crayola crayons? It's an awful lot of crayons. I don't know if there's enough coloring books out there, but let's show you how we can get some soybean futures on our charts. That way we can follow along as we learn a thing or two about soybeans. So we're going to go up here to the top left and click on the symbol finder, and then we're going to type a /ZS. After doing that, we'll see soybean futures. Give that a click, and we are all set. Let's dive on into the material and learn a thing or two together. Cheers, folks! Soybeans themselves are one of the most popular commodities worldwide due to their rich nutritional value, universal application, and relatively cheap production. So it's not too hard to understand that soybean futures is one of the most developed futures markets out there, not only among the agricultural sector, but also amongst the commodity traders. In fact, according to a report from 2018 by the World Federation of Exchanges, soybean meal futures was the 4th most traded commodity worldwide, ranking right behind steel and crude oil. In order to trade soybean futures successfully, it's important to understand the basics of the commodity itself, as well as the key factors that influence its price. This means understanding things like the demand for biodiesel, animal feed, the growing need for meat and dairy alternatives, changing weather, and so many other things, and I'm going to do my best today to try to cover all of those for you. So what exactly is a soybean? Well, it's a species of legume, which is classified as an oil crop by the UN's Food and Agricultural Organization. The first references to soybean crops were in China more than 3,000 years ago. The soybean itself is native to East Asia, where it remained fairly unpopular in other parts of the world until the late 1700s, and it was around that time that it was brought to the United States for the very first time. A few years later, the soybean became popular in Europe as well. Farmers quickly started to recognize the benefits of planting the soybean as it helped them clear the field for other crops and ensured the natural fixation of nitrogen levels in the soil. The last few decades marked a significant boom in soybean popularity and firmly established it as one of the most popular crops worldwide. Today, soybean has 2 main applications. We have industrial applications and we have food applications. Industrially speaking, we have things that are made like soybean biodiesel. This is a fuel made with the help of soybeans. We also have things like soy ink, which is an increasingly popular alternative to petrochemical inks. Soybean is also present in other technical industrial products such as polyesters, textiles, adhesives, cleaning materials even, as well as lumber products. Next comes my personal favorite category, as well as my 2 hungry friends here, and that is the food applications category. Soybean is used mostly in the production of soybean oil and soybean meal for food and animal feed. The plant is also used, of course, in the production of foods for direct human consumption. We have things like soy sauce, tofu, even some types of beer. No matter any way you think of it, there's probably something in your kitchen right now that is tied to soybeans. We even have soybeans in things like dressings, margarine, mayonnaise, even chocolate, as well as most of the condiments that we use. Global soybean production today is highly concentrated within 3 countries. We have the United States, Brazil, and Argentina, and together they account for more than 80% of total global production. The increasing popularity of soybean has resulted in a massive growth in population from around 270 metric tons in 2010 and 2011 to around 365 metric tons for 2018-2019. That is a massive increase in a span of less than a decade. The takeaway is that soybeans might not be a bad idea when thinking of investing due to the growing popularity and its multitude of uses. The most popular way to invest in soybeans is through a futures contract. This is because it offers an efficient hedge against unexpected market events, volatile prices, and discrepancies in supply and demand. Soybean futures are issued in a standard form, popular all around exchanges worldwide. Let's look at some specifications from a soybean futures contract. The product symbol, as we already know, is ZS because we were all good little girls and boys and put it on our charts at the beginning of the video, right? The contract size is going to be 5,000 bushels, which is approximately 136 metric tons. The price fluctuation will be $12.50 per contract, and our trading months are January, March, May, July, August, September, and November. As far as the termination of trading, that will occur 1 business day prior to the 15th calendar day of the contract month. And then as far as trading hours, we've got them down here as Sunday to Friday, 7 p.m. to 7:45 a.m. Central Time. And then we also have Monday to Friday, 8:30 a.m. to 1:20 p.m. Central Time. And as always, the CME is our source for all of this valuable information. If you ever forget it, just navigate on over to the CME Group website. In the last few years, farmers worldwide have been slowly shifting their production plans to soybean instead of corn, the leading agricultural commodity. And like we discussed, it's important to understand the entire production process of whatever it is that we are trading, which in this case would be soybeans, because a kink at any point in that chain will lead to some type of imbalance in supply and demand, which therefore could drastically affect prices. So with soybean markets themselves being so dependent on the seasonality factor because they are on a fixed production cycle, the soybean process follows 3 steps specifically, and that is planting, potting, and harvesting. Planting is the process of field preparation and planning, and this is handled usually in the period of mid-March to May. If there are no delays during the planting months, the prices of soybean futures usually tend to go up. The planting stage is very important also for the fact that it provides initial estimates for the expected supply. Then we have potting. Throughout the second stage, potting, which usually takes place in August, the soybeans start to reproduce. The futures price is impacted by the pace of potting of the soybeans, as well as outside factors that can affect the final harvest, such as pollination. And then finally, we have harvesting. Soybeans are harvested in the period of October to November. The price of soybean futures can be impacted should there be delays or crop diseases like Asian rust, which is a fungal disease that no farmer wants to hear. A change in the time frame for any of these, the planting, the potting, or the harvesting stages, can have a direct result on the time frame for the final supply of the commodity. There are other seasonality things to be aware of as well, such as during the winter months when the demand for soybean meal and livestock rises, the prices of soybean can go up quite quickly. On the other hand, during the harvest period, which usually takes place in autumn, this can result in an increased soybean supply, which in turn can obviously cause a price drop. Something else to take into consideration as to why soybean futures may be the futures choice for us is the fact that we keep making babies. We have a 7.7 billion, roughly, and growing world population at the moment, and the UN expects that number to grow to somewhere around 9.8 billion by 2050 and then 11.2 billion by 2100, if I'm even around then. A growing population means a growing need for food, which soybeans are, as well as things like livestock, which are fed what? But soybeans. All of this results in an increased demand for the soybean, which then in turn drives the prices up. The demand for soybean is expected to increase in the next few decades also because of a strong global economic growth projection for emerging economies as well. As emerging market countries get richer, we predict they'll increase their demand for livestock feed as well. As a result of this economic boom, the population will be able to diversify their diet and thus add soy-based foods to their daily meals. Something else to take into consideration is that it's getting hot in here, and I'm a terrible singer, but global warming and changing weather make soybean futures unstable at times. What we're currently looking at is an SPEI, gotta say that one carefully, SPEI Global Drought Monitor image here from 1990. Where you see the dark gray areas, we're experiencing periods of drought. The white areas will be areas with higher moisture content. And as we look at this from 1990, you can see that there's a few key areas here, mainly located in Russia, some of Europe, we have South America, and a few parts of North America as well, and a little bit down here in Australia. But nothing too crazy going on. But watch what happens as we move through the years and come along here to about 20 years later of 2019, the same image. All of a sudden, these drought locations are all over the map. We've got them all throughout Canada. We have them in parts of the United States as well. We've got them in South America, all over the place, all over Africa, all over Australia. A ton of different things going on here that are not good for the soybean crops themselves. Whether it be a drought or a torrential rain, both of those can be quite damaging to soybean crops, and paying attention to the weather patterns is something that, although the weather does, continuously express itself as being something tremendously unpredictable, the trajectory that we're heading at the moment is not necessarily ideal for any type of agricultural growth. We're seeing global warming of increased intensity over the years as we go forward, and whether or not you're a supporter or denier of global warming and climate change, the fact of the matter is these are factual reports of what is going on with the droughts, and the trajectory that we're going is not necessarily a great one, but nonetheless, it is something to be aware of. A weakened dollar and global trade wars also lead to strong soybean price fluctuations in the futures market as well. Since Trump's cabinet started the trade war with China, soybean exports have been one of the main victims. The number of soybeans sitting in storage in December of 2018 equaled 80% of the total U.S. harvest last year. The good thing is here that soybeans don't spoil quickly and can be kept in storage for about a year. However, the inability to export such a large quantity of soybeans is a consequence of the trade tariffs against China, the biggest export market for the U.S. Figures by the U.S. Department of Agriculture point out that for the period of October 2017 to May of 2018, American soybean exports were 24.7 metric tons. The figure for the same period but a year later is 6.9 metric tons. This is a decrease of 72.06%. The trend for the overall Chinese demand for soybeans is expected to continue moving in a similar direction in the next year as well, but the drop in exports is not the only result of the tariffs, or the drop in exports is not only as a result of the tariffs, I'm trying to say, but Chinese farmers, for example, started using less protein in the foods they feed their livestock with, also adding to that drop. A successful futures trader is an informed futures trader. And now that we're aware of some of the key driving factors behind the price of soybean futures, we should focus on some of the regular reports that happen throughout the year that heavily impact the price of soybean futures as well. Our first one is going to be the World Agricultural Supply and Demand Estimate Report. That's a mouthful. This is a monthly report by the U.S. Department of Agriculture that is a very valuable asset for every commodity futures trader. It contains forecasts about U.S. and global production in trades of wheat, oils, rice, cotton, and of course, soybeans. The analysis is very insightful and collects data from various sources, which makes the report a very strong informational resource for traders. Then we have the Prospective Plantings Report. This is another valuable issue by the U.S. Department of Agriculture that provides information about the expected plantings and the previous year's harvest. The report is based on a survey with farmers around the U.S. conducted by the USDA. The results provide market participants with a solid expectation of the size of each crop for the coming year. The information includes crops such as corn, wheat, oats, flaxseed, rice, and, once again, soybeans. We also have the Grain Stocks Report. The Grain Stocks Report is a seasonal issue from the National Agricultural Statistics Service that offers updates on soybeans and other crops by state. It is issued 4 times a year and contains data obtained by on-farm and off-farm surveys. And finally, we have the Crop Production Report. We want to make sure to check the crop production report as well as all these others. This is issued each month, and this report contains valuable information about key factors related to soybean trade and production, such as area harvest, real acreage, and yield, all those good things that would give us an idea on what to expect in regards to the supply and quality of a soybean harvest. Traders can find this analysis very valuable because it also contains monthly agricultural weather summaries as well. This includes precipitation details as well as deviations from whatever the normal precipitation for that area might be. The crop production report also keeps traders informed about fluctuations in supply, which once again helps them prepare for potential price volatility. In conclusion, soybeans have come a tremendously long way in a relatively short period of time. They're a very powerful source for the planet as a physical product, and the soybean futures market is really no different. It has a very strong liquid commodity presence where it is one of the most popular options out there to date, with a lot of valuable technical analysis patterns that are happening regularly. And if we stay on top of some of the fundamental things that we talked about, like the global news, the changes in climate, the weather, the tariffs that Trump's doing, anything that we mentioned today, if we stay on top of that, plus the technical analysis side, soybeans can make a very, very interesting futures market for any trader out there. But until next time, thank you for joining me again for another survival guide. It's been a pleasure as always. Before you go, please make sure you click the like and subscribe button below, and I will see you on the next one. Cheers, everybody, and happy trading. Psh.